no hope, you can still go. I never answer to no, man, I still go. Go, 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 go.
Stagnation, welcome back to the channel. It's your boy Brazen.
And your boy Double O! Woo, woo.
Double O.
Yes,
How you doing today, sir?
Beautiful day, beautiful day.
Amazing, amazing. Hey, look, before we jump into the show here, ladies and gentlemen, first of all, we want to say we noticed that we definitely gained some more subscribers, right? It was definitely a little bit of a little sprint in our action there. So before we even get into it, man, I'd like to say thank you guys for subscribing. We're almost at 300, right? And it's incredible that we have to, that we get to do this every day, even though it's not the easiest thing. I'll be honest with you, right? Between balancing work, just other things that we're working on, and of course, researching, right? And also just doing research for our own investment and things like that. And of course, for you, Kenny, I know you're a family man, sir, right? So balancing all of that on top of taking care of kids and the whole family, right? So it's incredible. I don't know how you do it, but incredible. And I have to also say, man, kudos to you for just pushing, man. You know what I mean? Because people can make a lot of excuses. So I'm very happy about that. Makes me feel good about everything. So let's jump right into today's show here, man. This one is very special, right? Because this was actually a request from one of our STAKK fam, if you will, right?
Biggest
Wendy,
fan.
right?
Yeah, biggest
So-
follower.
Exactly. So Wendy hit us up on Twitter, and she was like, "Hey, listen, man. I think people need to learn more about the financial crisis of 2008, the financial market crash, because this is important because this is why Bitcoin is also around, and there is that saying that if you forget history, it's bound to repeat itself, right? So, of course, we had to jump into the lab, man, and get down to work, find out what is the real deal, okay, so we can deliver. So here we are. Thank you for the idea, Wendy. So we're just gonna dive into this and see how it goes from here. Now, this is gonna be a long one. I'm just gonna say because what we did was we actually went back, right? We did our research, right, and we pulled up the receipts. Okay, we're not playing with y'all. We went all the way to the official financial crisis inquiry report. Okay, this is by the Financial Crisis Inquiry Commission. So they did their own research on the whole situation or their own investigation, and they created an official government edition, essentially outlining everything that happened up to that 2008 financial market crash, and a little bit more of a deep dive into what happened in there. And I will say this. It is interesting, the things that are not spoken about when you hear about the 2008 financial crisis, because a lot of times people think it's just, it was just 2008 crash, right? And the housing market has crashed. But how did it get there? And how long has this thing been building is where I was surprised. What about you, Double O?
Dude, man. I was in the financial space during the
Right.
2008 financial crisis.
Yeah.
But until I read this report, I knew that Bitcoin was for a major purpose. But until I read this report, I was able to even better understand the before 2008, the after 2008, and why Bitcoin is even more extremely important.
Absolutely.
This is major. You guys, you're getting to watch this through the end, man. It's
Man,
fire.
Grab a coffee, grab a popcorn, right? Whatever it is people eat these days, and let's jump into this situation here. Now, I would like to open this by just reading this, the first line on that report here, right? Or at least the introductory paragraphs of this report, because I think it is very important to just detail how this whole situation went down. What is happening to my voice, man? Jesus Christ. So it says, in this report, right, we detail the events of the crisis, but a simple summary as we see it is useful at the outset, while the vulnerabilities that created the potential for crisis were years in the making.
Years in the making.
As far back as 1920s, man.
Jeez,
Right?
Brentwood Agreement.
Man,
What
we're gonna
so?
dive into it now. Come on. It was the collapse of the housing bubble fueled by the low interest rates. Easy, and I think people should pay attention to this. Fueled by low interest rates, easy and available credit, scant regulation, and toxic mortgages.
Gang, gang,
Okay.
gang.
Mortgages which were packaged and repackaged and sold to investors around the world.
Say that again.
Right?
Packaged and repackaged.
Packaged and repackaged. And we're talking about something that maybe should have not even been packaged in the first place. Right? So there we are. Now, this happened not just in the United States, right? As they sold it all around the world, the losses were magnified by derivatives and by derivatives such as synthetic securities. I keep messing this up, but wait till we get to what synthetic securities is, man. Absolutely insane. Right.
Is that even possible?
Well, everything is possible when you have a bunch of money which you can throw at some people. Right.
Well, you got money.
Right before your eyes, you will see that in examining the worst financial crisis meltdown, right, since the Great Depression, the Financial Commission, and this is just credibility for this report here, they interviewed a lot of financial executives, business leaders, policymakers, regulators, and community leaders. So everything we're looking at in this report, and I think that it's important for people to get it, that everything we're looking at in this report is not anything that we're coming up with in our mind. This is what the people who are part of the government, right? The truth, right? They've written it and they've put it out there. There were public hearings as a result of this whole thing, and many of these public officials testified saying that they were blindsided by the crisis,
really?
describing it as a dramatic and mystifying turn of events.
For real?
Mystifying,
huh?
Even among those who worried that the housing bubble might burst, few, if any, foresaw the magnitude of the crisis that would ensue. Well, I wonder why a few of them were able to see the level of of the damage that it was going to do, and we'll get into why that was. Talk about shadow banking, right? Now, this is one thing I would say. Before I read these remaining paragraphs that we have here, one thing that is important to notice is that all these, when you talk about the interest rates, right, and the ability for people to borrow and things like that, a lot of these things are actually makings of the Federal Reserve itself, as well as other regulatory branches in the space, right? And so we'll iterate here on this one again. It says, when the Federal Reserve cut interest rates, right, early in the new century, and mortgages fell, home refinancing surged, climbing from 460 billion in 2000 to 2.8 trillion in 2003.
Just 3 years, man. Just 3 years.
3 years. 3 years.
Yeah.
That was the impact of just slashing interest rates a little bit, right?
Yeah.
And essentially, this allowed a bunch of people to do crazy things like pulling equity from their home to buy things that maybe they shouldn't have been buying. Some people decided to take it to get into business, right? And
smart move.
Home rates just kept rising. Now, it rose about 67% in 8 years. And mind you, I think there's a similar rise with the COVID situation.
What's going on right now?
But the difference is that it did it in literally like 2 to 3 years. Yet we have people who are thinking that the housing market is not going to pull back. Okay, we'll see. So in 8 years, right, across 8 years, 67% rise in the housing market. Houses got to a national high or national average high of about $227,000 in early 2006. The fact that 2006, look at 2006, okay, $227,000 for a house was high up there.
Jeez.
And today this is like what, entry level?
Sure, it's not an entry.
Okay. But I have to say the quality of houses, the quality of houses have not improved, man.
No,
it's not that much greater. It's still a house, still 4 walls and a roof. Okay.
If your technological changes, upgrades, I could say, but
bro, technology is supposed to make things cheaper because technology makes things efficient. So why is the house getting more expensive? Isn't that the whole point of technology? Efficiency.
Yeah.
which makes
Yeah, you're
things
right.
okay.
The
You
houses,
know what I mean?
the houses are for sure a lot more efficient nowadays. That I can
Listen,
say.
at some point in time, okay, it took a long time to build a house,
Hmm.
but today you can put up a house in
Three,
rapid.
4 months.
You know what I mean?
Yeah, yeah,
It's absolutely rapid because you have cranes and all these other automated things that help the builders, right?
yeah,
They don't have to like manually do everything.
yeah.
So
You can build a house off site and just come to the location and assemble it.
exactly, right? And so this means that it probably takes less people to build a house, but
Yeah,
the
that's
same
definitely
house would
makes.
cost more right now.
Yeah,
So there is that. Anyway, um, before we even got to this point, right? And the next part we're going to talk about because we would like to roll it back as well and talk about the what happened in the 1920s and how we got to this point of this little paragraph which I'm reading here right now,
yep,
right? Now, housing, right, nationwide climbed about 53% from
yep.
1.4 million in 1995, right, to about 2 million in 2005. And this was encouraged by government policies, right? Home ownership reached about 69.2% in the spring of 2004. And when we say encouraged by policies, we'll see what happens, right? What the banks did to kind of push back or set up the government for this whole situation here, right? Now, with those low interest rates, there was a lot of refinancing. And so by people refinancing their homes, right, Americans were able to extract 20 trillion in home equity between 2000 and 2007, right, including 334 billion in 2006 alone, right? More than 7 times the amount they took in 1996. So people are pretty much deep in debt at this point, extremely leveraged on whatever it is that they're taking this money to do with, right? And real estate speculators and potential homeowners stood in line outside new subdivisions for a chance to buy a house before the ground had even broken. Insanity. This is like tulip. Is it what is it called? Is it called tulip? Yeah, something like that.
Yeah, 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 yeah.
So by the first half of 2005, more than one out of every 10 home sales was to an investor, speculator, or someone buying a second home.
Hmm.
Bigger was better. And even the structures themselves ballooned in size. The floor area of an average home grew by 15% to about 2,277 square feet in the decade, right? From 97 to 2007 itself. Look at all of those happening, sir.
Can I add a little bit to that?
Go for it, man.
So I was in grad school during all of that drama, and I
Yes.
knew of a lot of classmates that started real estate businesses around that same time. That
Right.
were buying properties, and those properties were quadrupling. They were making a lot of money while we were still in school. Folks in
Absolutely.
undergrad, folks in grad school, and I have to say there are different angles of everything that you just read there.
Mm.
There were the bankers that were manipulating, or shall I say, convincing either the Democratic Party at the time, was
Right.
it 2004? Who was in office? Anyway, they were confusing Congress that
Right.
home ownership was the next big thing. Home ownership, really? But you are in debt. You don't own the house. The banks own the house, which allows the
Mm.
banks to repackage and do all the bundles and bundles and reselling and reselling. But they were promoting home ownership, also a bunch of FHA, small business plans that allow you to buy the houses. But the house prices were like you buy a house today, and by the end of the week, it's like 50K more, 100K more. And I was like, what the heck is going on?
Jeez.
To the point that
Jeez.
even I go but I bought a house in 2007 at
Right.
the tail end of the old
Of
balloon
the whole thing.
popping.
Oh
So
man.
I got in at the wrong time. I should have gotten a lot much earlier.
Yeah.
But it's an old system where somebody is literally grinding you into the debt, where a lot of people are profiting at the end of it. Now, if you
Mm.
were smart and you were able to do a business as part of it, that was good. But a couple of people over leveraged. They were
Right.
using the equity in one house to go buy another house, to buy another house, thinking
Yeah.
that they were super rich. But at the end of the day, it was still the banks that knew what they were doing that could either make money with with the market crashing or with the
Yeah.
market ballooning up. It was crazy.
Yeah. Absolutely insane. You know the the horrible part about this whole situation is that as all of this is happening, right? For some people, they just wanted to own a house and just work and have a nice, I guess, family environment. Like
Yep.
an American dream, right, of some
Yep.
sort.
Yep.
Meanwhile, we have people on another side just going absolutely crazy with, I guess, taking their mortgage and gambling it
Packaging it
away
up.
and packaging it
Yep.
and doing all sorts of crazy things. But then, this did not just happen overnight. Now we see that for this setup to happen, we have to roll all the way back almost to about the 19 after
Yes, every
like
decades back. Yep.
1929 or so, something like that.
Yep.
So let's look into what they call shadow banking.
Yep. Again,
Shadow
guys,
banking.
this is where we have Bitcoin, folks. Once you start understanding how the system works
Right.
and how it has been working, you start saying, okay, what is the alternative solution? And this is why I personally believe in Bitcoin.
Absolutely. This is exactly why Bitcoin is here in the first place, man. So if we look at this now, we see that shadow banking is exactly what it sounds like, right? This part of the report here is just going to explain what shadow banking is, and essentially, this is a phenomenon, right, where the investment banks, right, and other financial institutions freely operated in the capital markets, but beyond the reach of the regulatory apparatus, right, that had been put in place in the wake of the 1929 crash and the Great Depression, right? So after the Great Depression, regulators put, certain rules in place to kind of stop, the same thing from happening again. But yet we have banks that are operating just outside
Legally.
of that system, legally outside of that
Legally.
system,
They
right?
still do that. Not just the banking, also trading as well. We
Trading,
all
yeah, I
don't
mean,
trade
listen,
on the same platform.
when they talk about what is it, black
Black
pools, I think
pools,
this is sort of what they're referring to as well, right? So
OTCs.
it says this system, the shadow banking system, this new system threatened the once dominant traditional commercial banks, and they took their grievances to their regulators and to Congress, which slowly but steadily removed long-standing restrictions and helped banks break out of their traditional mold and join the feverish growth of whatever insanity was happening, the whole mortgage situation,
The regulation is
right?
a good thing. It's a good thing for the market. You probably heard that a
Exactly.
lot in the 2000s if you were listening
Hey,
to the news.
right now, as a result, two parallel financial systems of enormous scale emerged. This new competition not only benefited Wall Street, but also seemed to help all Americans, lowering the cost of their mortgages and boosting the returns on their 401ks. Is that so?
So it
Shadow
is
banks,
temporarily.
right? So shadow banks and commercial banks were codependent competitors. Their new activities were very profitable, and it turned out very, very risky,
Very, very
extremely risky.
risky.
I'll add another risky in there, right? Now, back then, the Fed chairman was Alan Greenspan,
Like
of
F
course.
old as F now, man, but he did his
Exactly,
damage. But at the time, it was hailed as the best economist ever.
right? So, secondly, they take a look at the evolution of the financial system here. I'm just going to read this line and then we'll discuss about it. So, to the Federal Reserve and other regulators, the new dual system. So, you see, the Federal Reserve is aware of this shadow banking situation, which they've now agreed that there's going to be. The new dual system that granted greater license to market participants appeared to provide a safer and more dynamic alternative to the era of traditional banking. More and more regulators look to financial institutions to police themselves. Deregulation, right, is what it was labeled. Former Fed Chairman Alan Greenspan put it this way, and his whole idea was that if these guys are able to uh, police
Self-regulate.
themselves, right, and
It will
have
be
this
good for the
massive,
economy.
right,
The
have this
economy will grow
massive
much
infrastructures.
faster.
Exactly, and they think it would balance out things and avoid a crash because of just the massive scale of it. Well, it
Real.
turns out that when you're doing this, you're just taking regulations and giving it to a bunch of greedy people, it does not work out that way. Your thoughts?
Ah, jeez. I was a college student at this time, and my knowledge of economics, even though as a college student,
Right.
I knew this was wrong the entire time because it made no sense. The human factor, the greed. How
Yeah.
do you say you deregulate the market and allow the banks to just run off and do whatever? Number one, their number one goal when we talk about capitalism is just profits. They don't give a care about you, mom and pop, or
Yeah.
business, or daddy and mommy trying to buy a house. They would sell you the most aggressive mortgage package out there that will have
Hmm.
you losing your house in less than a year after you've thrown all your savings at it. They don't care. They only care about profit. These guys only care about making trillions of dollars and just
Yeah.
taking the profits back home. And making it worse, they were pushing the same agenda all the way to your congressional representative to say, you
Yeah.
know what, this is good for the economy. This is way after the old globalization, shipping your job to China, and you're still trusting them to now run the banking and
The
housing
banking system.
industry, right? And everything
Yeah.
was super green, everything was okay. Now, if you were smart, you say, okay, you know what? If you can't beat them, play their game. But if you don't have an insider, they will get out the game before you do, and you get screwed. Reality is the system is broke because they are allowed to just run free and do anything, and nobody's stopping them.
Absolutely. Yeah. There's definitely a massive element of unfairness in the system. You can see clearly that after these guys essentially convinced the regulators to remove these safety nets that were in place, right? Take out regulation and allow them to run the show the way they wanted. You can see that there was a rise of shadow banks all the way there from, I mean, pretty much from 1980. You can see that it's just been a steady rise all the way to when you see the crash. So, so far, right, if we can recap, we'll say we had the crash from the 1920s. Regulators put things in place to stop this from happening, right? And they essentially removed the same regulations that were supposed to be there to protect the consumers and protect the economy, which means that the problem is never solved. And now you can see that the problem is starting to build again. Go ahead, Double Up.
Even what so shadow banking, right? People are like,
Yeah.
oh, who are shadow banking, right? There are short-term borrowers, commercial paper banks, so banks can lend other banks money, right?
Mm.
Nobody's tracking the risk, right? There's the repo market, there's the net securities, loaned, liabilities. So nobody you don't care about the liabilities. All you care about is net assets. Even though the net asset might have some liabilities behind it, which is the risk behind whatever asset that you've packaged up. And there's also the companies that graded the securities or the packages the derivatives that you put together in grade
Mm.
A, triple A, triple B. That's all the stuff that you can do
Right.
behind, like almost like your insurance company is doing an inside job with your bank company itself, doing an
Mm.
inside job with the loan officer itself, all the way to the point where it gets packaged up as maybe an ETF or whatever it
Mm.
is, and it gets sold to another company, and all that is done without the Federal Reserve's regulation. That's what you call
Uh,
shadow banking in the mortgage industry.
yeah, absolutely. That is what it is. Well, we'll take some looks at. We'll take a look at some more of that as we
Yeah.
carry on here, right? So, just um, moving on then. We can see that the issue is clearly, obviously, not resolved at this point in time because we have a bunch of people who have separate rules, right, from everybody else, and because of this, they're able to just push the regulators around. Is what it sounds like, essentially. Um, Create a market of their own, which other people are not able to participate in, and the Federal Reserve itself reducing those interest rates. And once they reduce those interest rates, it's great because now everyone can buy a house or take a loan and things like that. But it almost seems as well like it's a setup because when you have uh, people borrowing money, now you have predatory lending practices,
Loans.
right?
Yeah.
Where you have these banks that are uh, creating mortgages to people who may not have a job, having financial difficulties, whatever the case might be. And then they take this very mortgages and they package it and sell it to a bigger bank, thereby removing themselves from the risk, right? And so now your mortgage is hanging out somewhere else with someone who never even, made the mortgage for you. And then that new bank now takes that mortgage and turns it into what they would call a
Security, the
security,
derivative, yeah.
right? And then not only do they make it a security, they create other things called derivatives out of it, which brings us to securitization and derivatives, right? And this concept is
It's still going on, by the
absolutely,
way.
yeah,
That's still
absolutely
legal
asinine,
now.
right? And we see that this is something that Fannie Mae was doing way back in the day. They were also doing this, and they would when they take this mortgages and they turn it into a security and they put it back on the market, right? So probably the person who got that mortgage or something is probably buying your mortgage again for a second time, and of course they're selling it to their friends as well. But we saw that this was also something that they were borrowing a lot of money to do, right? So this system worked well, according to their report here, but it had weaknesses. So Fannie Mae bought mortgages by borrowing. Okay, by 1968, look at how far back they've been doing this. 1968, right? This has already been building up. By 1968, Fannie Mae's mortgage portfolio had grown to 7.2 billion, right? And its debt weighed on the federal government. To get Fannie Mae's debt off the government's balance sheet, right? The Johnson administration and Congress, okay, reorganized it as a publicly traded corporation and created a new government entity, Ginnie Mae, officially the Government National Mortgage Association, to take over Fannie Mae's subsidized mortgage programs and loan portfolio. Ginnie also began guaranteeing pools of FHA and VA mortgages. The new Fannie Mae still purchased federally insured mortgages, but was now a hybrid, a government-sponsored enterprise.
That is major right there. So Fannie Mae, a public, like, it's not owned by the government, even though
Yeah,
now it is. At the
it wasn't,
time,
yeah,
they had
but
a
now it is.
monopoly on the entire market,
Right.
to the point that they were even sponsored by the government, subsidized by the government. The
Yeah.
government, like, well, you know what, the risk is a little bit too high. Let's go ahead and create a GNMA. So now you have a public-private partnership, which this is one of the reasons why I think that all public-private partnerships are kind of doomed to fail eventually, because the private markets would eventually influence the public to join in the greed of privatization instead of providing value
Right.
to the consumers, right? So this is basically what happened
Yeah.
in the mortgage housing space. If this is happening in the housing space, imagine what else is happening in every other space. This is just one of those examples.
Yeah, I think it's happening in a lot of other spaces. Because I've seen some stuff, especially like I think insurance is
Transportation,
one of
oil
those.
and
Yeah.
gas,
Yeah, I think insurance is definitely one of those. Oil and gas is
yes,
also one of those,
insurance,
right?
yeah.
Yeah, and it's just not a good look, right? So let's take a look at some more of the details on this here. Now, obviously, we're not going to go through the whole report, but we just took some of the key points that we thought this is worth sharing with everyone, and for people to just be aware of how these things happen, so you can at least take this information and compare it to some of the things that are happening today, and see how that goes, right? So in this report, they also write that Fannie and Freddie had dual missions, right? Both public and private. Support mortgage market, right? And maximize returns for shareholders. Whenever they say maximize returns for shareholders, I'm just like, yeah, I know.
Yes.
Uh,
Who's the shareholders, right? That's what you should
yeah,
be asking yourself.
yeah. The shareholder is definitely not the investor. All right, that's
Yeah.
something that is good to distinguish. And the
Yeah.
investor is, the everyday person. Now, they did not originate mortgages. They purchased them from banks, thrifts, and mortgage companies, and either held them in their portfolios or securitized them and guaranteed them. So they purchase a debt,
Bunch,
right?
bunch of
And then
junk.
they securitize it,
Yeah.
right? Congress granted both enterprises special privileges, okay, as such as tax exemptions from state and local taxes, and a 2.2 billion line of credit each from the Treasury.
And somebody said that they were surprised that they didn't see this coming. You have an
Exactly.
organization that pays no
Yeah,
taxes,
they said they
that
were
was just buying.
blindsided.
I go- Everybody always come up with a story every time something gets screwed up. And we're over
Exactly.
here trying to say, you know what, let's stop this from reoccurring, and they're literally trying to kill the idea.
Exactly. Is it they were blindsided by this situation? But how can you say you're blindsided? Is you guys set it up? Like
It
tax
was set up that way.
exemption and 2.2 billion line of credit for no reason, dude.
No,
Whether they applied for it or not, they
you
just gave
can
it to them.
buy, this is what you call, is it quantitative easing? Where you could just keep buying and buying. They were literally given the green light to buy all the mortgages out there. Flexible interest rates, all
Yeah.
bunch of all those different packages that they had out there that people could not even, they know that they, they had no job
Yeah.
mortgage, bad credit mortgage, everything all packaged up. And Fannie Mae and Freddie Mac was just buying them up.
Yeah. Well, if you thought that was bad, get this part. The Federal Reserve provided services such as electronically clearing payments for GSE debt and securities as if they were a treasury bond.
Bond. Yep.
So Fannie and Freddie could borrow at rates almost as low as the treasury paid. Federal laws allowed banks, thrifts, and investment funds to invest in GSE securities with relatively favorable capital requirements and without limits. So essentially, the Federal Reserve was a how would you say, a point of sale system for the or like a, yeah, like a clearing system, right, if you will, for this people. Now, by contrast, laws and regulations strictly limited the amount of loans banks could make to a single borrower and restricted their investments in the debt obligation of other firms. So if you're a regular person, sorry, there's nothing for you here, right? So keep it moving. This
it
is
goes
not for
back
you.
it goes back to the balance that Bitcoin is trying to create.
Yeah,
Everybody is on equal grounds. But in the
right,
current system, if you don't have a level 6, you don't have a level 7, you cannot create a XYZ kind of security. You can do whatever you want without the feds bothering you. They might
right.
come and research you once in a while, but if you know the right people, they will never touch you. And what we're trying to say is that how do you spend money, number one, that you're not producing, and then
Yeah,
you're buying whatever junk out there and you're destroying people's lives. And then you always come back and say, oh, we didn't see it coming.
yeah.
But it's like I always say, it's like modern day sovereignty. Like literally, everybody's walking their lives thinking that they're putting their money into a good investment,
Yeah,
into real estates or into the stock markets. But then you have these guys that are running the show and doing whatever they want,
just
anytime they want.
wrecking everyone's investments, man. And this thing was a setup because you can clearly see this chart here is showing asset-backed securities outstanding, right? In the 1990s, many kinds of loans were packaged into asset-backed securities. And as you look at this situation, I mean, you're pretty much just looking at debt all across the board, right? I
The
don't think that,
American debt.
yeah, American debt. And so it would be ridiculous to say that at some point in time between 1989 to 99, Americans just decided, you know what, we're blasting straight into debt. The setup was there, right?
This is the part that anybody that says they don't give a care about Bitcoin needs to freaking understand.
Yeah,
Automobile, even though the automobile is down there, every single American, I will say 90 something percent, this is a guesstimate here,
the
has a
automobile is
car
horrible,
debt.
dude. Yeah,
Has a car debt, right? Everybody trying to show off for their neighbor that they don't even know, or somebody on the street they don't know. Automobile
right.
debt. This is again the banks getting richer on your debt. Credit cards, coming out of high school, right into college, freshman year, you already have credit card debts. It starts with that
Yeah,
little $20, $500 credit card that they give you. They destroy your life. Credit card debt is super high in America. Everybody knows that. The freaking economy runs on credit card debt.
yeah,
Constant promotion on TV trying to get you to buy stuff. Home equity and other residential. This is people buying houses, thinking that they have equity, taking loans from their house to go buy other stuff like buy cars or try to show off, go on vacation instead of trying to invest it in another business. That keeps
absolutely.
adding up right there, right? Manufacturing and housing, still same thing. That's still housing, right? The whole housing industry. So imagine student loan debt. Oh, go to college, go to grad school, do this. You go to Harvard, you go to Stanford, get all this debt. You come out of school, you can't even freaking get a job because all the jobs are shipped abroad. This is
Exactly.
this is how the American system is configured to keep the entire system working, to keep the gear working. But the gear only keeps working because everybody is in debt. But then the
Yeah.
government gets to spend any kind of money anyhow, and
Yeah. I mean, I think not only that, as they're spending this money as well, there's also the fact that, you know, the banks are essentially allowed to come up with whatever bullshit product they
yeah,
think of, and whatever sort of predatory fees that they will charge people, right, to partake in this product. And the ability to essentially push regulations in their direction to make sure that
yeah.
whatever insane product they came up with is profitable to them and their shareholders.
One
Right?
group can create as much money as they want. The other
Yeah.
group can get in as much debt as they want. Who do
Yeah.
you think is going to win at the end of the day? The guy creating all the money.
Yeah. They can create money. They can, and that's the thing. It's just so insane. The same rules do not apply to the other side. If the people were able to get in as much debt as they want, could create their own money, then hey, we can all create money and
Did
all
you just
borrow it
did
to
you
each
say
other.
create their own money? That's like a terrible.
Hey, I mean, dude, that's
All the
what that's what.
altcoins.
Look, this is the thing. This is what the crypto space is ultimately. I mean, this is what the crypto space is. I mean, the only thing is the government cannot really, they're
They're
trying,
trying to,
but they're
yeah,
having a horrible time because it's global, and it's like you can create a coin without even being in the U.S. and you can, So I think that this is one of the incredible things about technology, crypto, and especially Bitcoin, right? Because we're now in a place where we have something that people cannot do things like this, you know,
yeah, because
if we are
money
on the
should come.
Bitcoin standard.
Yeah, because money should come from work.
Yeah,
But in this case, people are working, but instead of their work becoming money, it's becoming debt because it's being consumed. A lot more money being created and lower
yeah,
interest rates.
absolutely. It is a cancer to our society,
Existence,
right?
yeah. Yeah,
Exactly.
major
Now,
cancer.
before we carry on here, ladies and gentlemen, if you're still watching, first of all, thank you. I would like to just notify you guys right now that we are on Spotify and Anchor as well. We're also on MTN, but that's down the line. We'll get back to that one. So please, if you have a moment, definitely check us out. Find us on Spotify, right? Just search it STAKK and give us a follow there. You can listen to our to the show as well while you're driving and good stuff like that. So
Yeah,
definitely check it out. Appreciate it. Now, Double O, let's jump back
jump
into this
in.
situation here, right? Um, Here's one thing that was interesting to me in this report, which we found. The growth of derivatives, by far the most significant event in finance during the past decade, they said. Now we've spoken about what was it? Securitization, right? Taking these mortgages and making it a let's call it a stock, right? But that was not enough for these people. Not just the stock. You have to now create something that represents something that you're not even attached to, and it has financial value because you said it did. But these are the same people who say that Bitcoin has no value, even though you can see the code working right before your eye. Check this out. During the financial crisis, leverage and complexity became closely identified with one element of the story: derivatives. Derivatives are financial contracts whose prices are determined by or derived from the value of some underlying asset, right? Rate or index. Is this not gambling?
I mean, in a way, when I'm looking at this from a different angle, it could
Yes.
be
What angle
like
are you looking
some.
at it from?
I'm looking at it from some altcoin angle as well now. Now that I'm looking at it,
An
I
altcoin
wasn't
angle.
taking. Yeah,
Explain this angle to me. Explain this angle. Let me hear.
So the fact that you can, I think we were joking about this when we were trying to talk about this topic. That
Yeah.
you see a phone.
Mhm.
We all know that the phone is red.
Right.
But someone says, "Oh, I bet that phone can turn green."
Yes.
You're
Yes.
the one that can turn the phone green, but everybody
This is
knows
right.
that it's red, right?
Right.
But The risk is in the fact that somebody at the back door knows that they can
Mm,
turn that phone green, but everybody knows that that phone should never be able to turn green. It's red. It's
exactly.
red. But
Okay.
then they bet it and they make it happen because they control the media, they control the exchanges, they control everything, and boom, they make money out of it. Until someday somebody hacks the system and boom, the phone can't turn green anymore and everything comes crashing down.
Everything
So
comes crashing down.
something just clicked into my head like, oh, that's kind of like what the altcoins, some of the altcoins folks are doing as well.
The altcoin folks. This is true. It's very much what they're doing because I think that a lot of the altcoins, they were. It was mostly speculation on promises. Whoever could make the
Empty
best
promises.
promises, right?
Exactly.
Because crypto has been here for a long time now,
Way longer.
right?
Yeah.
And these people, like, let's say if you look at something like Cardano, right?
Hmm.
Or let's say something like Hex. What is the use
Hmm.
case? The use case is that if you buy it, you get profits. That's it. If you hold it, you get profits, and you have to lock it in for a period of time. And so people would buy it essentially with the hopes that other people will buy into it as well. Now, some people may not even understand that that is what is going on. So, in many ways, yeah, it is. It's gambling though. At the end of the day, because it's just there is no guarantee, there is no numbers, there is no trends that you could show.
The
That
value added for X is not there.
exactly. Thank you. That's what I was looking for. The value add was
Yeah.
not there. Right
Yeah.
now, oh man, this is so insane. Now they speak a little bit more in this article here about
Which
just go ahead.
which goes back to that old derivatives. There's no
Right.
production, right? It's
Yes.
just speculation and I guess you call it gambling. It's just
It's
that you're
definitely gambling,
creating.
bro. Because think about this. Let me add this in there. Okay. If you we'll go back to your phone example. Let's say I'm the banks, right?
Yeah.
And you have the phone. We know that the phone should not turn green, right?
Yep.
If I have the amount of money and the regulatory power, essentially, now that all the regulations are on my side,
Mm-hmm.
right? Um, I would, let's say people are hoping that your phone is going to go up, right? Or
Mm-hmm.
let's say, yeah, and they're now pouring money into your fund.
Mm-hmm.
Well, I could come to you and be like, hey, look, all of these people think that it's going to go up, but I'm going to give you this much. I'm going to short the thing tomorrow. Instead of letting it turn green, just turn it red. Just turn it, instead of letting it stay red, just turn it green,
Mm-hmm.
right? So no matter what the person on the other side is doing,
No matter how
they're
much technical analysis you're doing, no, it's
exactly.
not going your way.
Your portfolio is in my
It's in their
hand. Your
hands.
your
Yeah.
portfolio is in my hand now, and there's nothing you can do. And this is what most of the market is today.
Yep.
Okay, because as we come to find out, this thing has not been resolved.
No,
You know,
it hasn't.
it
It's
hasn't.
happening. It's happening with the old energy go green situation as well.
Yeah,
Oil is doing the
exactly.
same thing. Even gold is doing the same thing.
Indeed. I thought gold was a hedge against inflation. Isn't that what Peter Schiff was always on about?
Ah, gold is manipulated like no man's business.
Insane. Many financial and commercial firms use such derivatives, right? Like as we just explained there, a firm may hedge its price risk by entering into a derivative contract that offsets the effect of the price movements. So these they don't know anywhere the thing is going. They're running both ways, right?
Hmm.
Losses suffered because of a price movement can be recouped through gains on a derivatives contract, especially if you can affect the direction of that derivatives contract. You know that, well, since I lost it in the market, I'm just going to bring it back by influencing something on the other side, right? Institutional investors that are risk adverse sometimes use uh, interest rate
Interest rate
swaps
swaps.
to reduce the risk to their investment portfolios of inflation and rising interest rates by trading fixed interest payments for floating payments with taking with risk-taking entities such as hedge funds. Hedge funds may use these swaps for the purpose of speculating. My colleague, speculating, they even say it, in hopes of profiting on the rise or fall of a price or interest rate. When they
Just
talk about
imagine you can
profiting on
you
the
can
price of interest rate, isn't
interest
that
rates
things
alone.
that are right?
Yeah, you've not added any
Um,
value you've not added any value to the economy. You're just betting on the increase and decrease of interest rates.
Well, who is in control of the interest rates? Is
The
it
Federal
determined by the
Reserve.
markets or the Federal Reserve that was serving as a clearing
Uh huh.
station for them? Yeah,
Yeah.
trustworthy, isn't it? Absolutely insane. Deregulation redux. What does that even mean?
Just I guess breaking
Oh
down the old
man!
deregulation process.
Listen, here we go, man. Expansion of the banking activities. Shatter of the Glass-Steagall Act. What was
Hmm.
Glass-Steagall? This was the regulations, right? That were put in
That
place.
was put in place to try to prevent all of this from happening in the first place.
Mm. By the mid 1990s, the parallel banking system was booming. Some of the largest commercial banks appeared increasingly like large investment banks, and all of them were becoming larger, more complex,
Goldman Sachs.
and more active in securitization. So,
Mm.
securitization was full blown. Everyone was in the action now, right? Some academics and industry analysts argued that the advances in data processing, telecom communications, and information services created economies of scale. Cha, I've heard that somewhere. And the scope of financial and the scope in finance, and thereby justified ever larger financial institutions. Bigger
Isn't that
would be
what's kind of
safer.
going on right now?
That is kind of what is going on right now. It's pretty much
The
the same
banks
thing
are
that's
getting
going on right
bigger.
now. It's the same
Yep.
thing. It's the same thing going on.
Yep.
The banks and many other institutions like Amazon, you
Yep.
can see that there's a lot of monopolization happening. Small companies getting killed out or bought out and destroyed, and then it's just a few that are continuously expanding and expanding. And you would see that if whatever their investments may be, right, technically they're all pulling in the same thing. And furthermore, all of the money that has been printed and put into the hands of these big corporations is something that we're going to talk about in the end, right? We'll get to
That's
that. Yeah, we'll get to that. We'll get to that. Don't worry.
yeah.
We'll get to that. Right. So bigger would be safer, they claim, but it was not the case. Right now, as they grew, the large banks pressed regulators, state legislatures, and Congress to remove almost all remaining barriers to growth and competition. And they had success with that.
That's why they're doing everything now for regulations to stop
Okay.
Bitcoin.
It's insane. But that's the
That's
beautiful thing
exactly
about it.
what's going on right now. They are trying
You
to
can't
stop Bitcoin.
listen. Who are they gonna go talk to now to regulate Bitcoin? Who are they gonna go talk to stop Bitcoin?
The same Congress people, but Congress can't stop Bitcoin. They have no control
Nobody.
over that.
Nobody can touch it, man. They can see if they can find Satoshi. Maybe that might help them in this situation.
Nah, I mean, if folks
Nah.
keep putting their stuff on the exchanges and the banks have control of that, then we have
Well,
that issue. Once folks get off the exchange, that's the only weak spot right now that I see.
here's the thing. People who are on the exchange, they don't really have Bitcoin. They're just we'll give them a
Trading,
participation trophy, but they're not
yeah,
really. I mean, it's not
trading,
a.
trying trying to make a profit.
Yeah, that's not the Bitcoin standard. In 1994, Congress authorized nationwide banking, right, with the Regal
Rigo,
New Interstate Banking and Branch Efficiency Act. What they just come up with all these crazy names, man. What? Just call it what it is. A freaking scam. This let bank holding companies acquire banks in every state. So this was, they were trying to have some
consolidate,
separation, some
yeah,
decentralization, but now the Regal New Interstate situation is now
yeah.
allowing for consolidation, right?
Hmm.
And remove most restrictions on opening banks in more than one state. It preempted any state law that restricted the ability of out of state banks to compete within the borders. So the big banks come in, buying out all the small guys and pretty much taking them out of business. And that was made possible by regulators of all people,
Same people that you and
right?
I put in office.
Right. So during this time, as all of this is happening as well, we see that the compensation in the financial sector was just blowing out from the rest of the country, right? Um, Obviously, there is this continuous mortgage situation and everything else and all the leverage going on. But we also know that inflation is also like always slowly rising, right? But we've also seen those charts where you see that wages are staying the same and inflation just keeps rising. So when you now throw in a rising interest rate in there, you can see how things will be destabilized. But people in the financial sector, of course, blasting to the moon, six figures, right?
Hmm.
And everyone else is just coasting there. Any thoughts?
Um, honestly, reading through this report gave me an headache.
Right.
reading through it again right now as we're going through it is also giving me an headache. Um, and I'm just trying to figure out how do we allow ourselves to get to this situation or live in this space and think it's normal.
Yeah.
Bankers, basically, in summary, bankers rule the world. If you're a banker, good for you. But how do you sleep with yourself if you know
Yeah.
that this is what you're doing to your fellow human beings?
Yeah. It's predatory, man. This guy's got a grip of the situation, and look, I don't. It does not give me a headache. I don't feel stressed. I don't feel bothered about it. Because when you have a great plan, sometimes you just have to be patient, right? And I think Bitcoin is not something that is gonna, yeah, it's not gonna spring overnight into what we expect it to be. But
This
we have a
this
starting
guys have a
point.
this
We have
guys
a
have a
starting point.
plan. These guys have a plan and they're doing a crazy ass job at executing it. That I have to say.
No, that is great, and you should
They've been
expect that.
breaking the system down for years, and they
You
still
should look,
continue
man.
to.
I would expect nothing less. It's great to have a plan. They should have a plan because this is what they build their whole career on. Okay, I'm not part of their plan, and I don't care what their plan is. The only plan I have is Bitcoin, right? And I'll give that 100% of my energy. They say the sun does not care, right? His sun is going to rise every day. That's the
Mhm.
sun's business. So it's fine. They can have a plan, bro. It does not matter. We've seen what they can do with their plan. And this is the whole reason why we're doing this. It's about awareness on our end. We see your
Okay.
plan, right? And we're going to work to get the hell away from your plan,
Mhm.
right? People's 401ks have been wrecked time and time again. The pension situation, right?
Mhm.
Maximum wreckage. I will not participate heavily in those things anymore. I would try to strategize. Yeah, I get it. Like I may have to buy some stocks at some points, but I will not just expect that I'm going to put my money in a 401k or a pension still even a thing or whatever they have now, right? And I mean, dude, how many people have you seen that have said that the 401k is dead?
Literally, everybody that are towards retirement. I've seen this happen twice
Yeah,
in my lifetime, where
yeah.
people are getting close to retiring and the market literally just getting destroyed.
Guess what? If we have to see it for a third time, it's gonna be us.
Oh,
Okay,
that's
it will
not
be
gonna
happening
happen
to
during my
us.
time.
I mean, so I don't want to be there. That's why I'm saying that we see your plan, and now it's our job to change that. It's our job. This is what we're doing right now. The work to make sure that people understand what Bitcoin is about. I get it. If someone does not everyone is going to make it. Some people are just going to keep blindly just putting their money into a 401k because they said this is what you do at your job, blah, blah, blah. It is not even beating inflation right now.
Yes,
It
let's
is not
get
a winning
inflation.
plan. It is absolutely a 401k right now is just not a winning plan. It's not winning against inflation to begin with. That's like the first measure that I keep looking at. And if we're not even beating inflation, okay, let's run it down the line. Can I trust that it's really going to come back? Because if you look at bonds, right, that people say like 10-year, okay, 10-year has passed now. Can they really say they profited from it? Because that thing has just been
Oh,
going straight
no.
down,
The books that you read is like, oh, 60, 40, 60 markets and 40 bonds. And you're like 40 bonds, 40% bonds
bro.
with a 2% gain or 3% gain. What you going to do with 2, 3%
Listen,
when inflation is almost 10%?
60/40 is
And
for
the
farmers,
actual
okay?
one is 18%.
60/40 is for farmers. That's like a manure mixture or something that they use on the fields. It's not for an investment portfolio. It's garbage. Okay. Listen,
That 60-40 is dead, I think.
it's beyond that.
You can't
So
60-40 this day, man.
exactly. So
Even
someone says,
even the 60 itself has to be replaced with something else. Because at this point, 60 is getting his butt whooped.
yeah, 60 is done for. You know what I mean? Do even gold, man. I mean, it's, I mean, yeah, it's an interesting time we're living right now, and I think that this is signs of. Think about what happens when the crash that is coming up hits full swing. There is no way if people go back to this system, then they deserve to be where they are. That's it. They deserve to be where they are. So financial sector growth, right? There's a quote here. I think we overdid finance versus the real economy. Insanity. For about 2 decades, okay, beginning in the early 1980s, the financial sector grew faster than the rest of the economy, right? Rising from about 5% of gross domestic product right? GDP. So about 8% in the early 21st century. In 1980, the financial sector profits were about 15% of corporate profits, and in 2003, they hit a high of 33%, but fell back to 27%.
This is when folks are like, oh, they're not sure why the actual market is different from the stock market. It all
Right.
began here. You know,
It all
you
began
you
there.
you you are creating money without work, and you think that's normal because that's just, oh, you figured out a way to cheat the system.
Right.
So just go ahead and start creating a lot more money without the value being added to the economy, and you're wondering why the Main Street and Wall Street are two different things.
Absolutely. When the bank is 15% of corporate profits, right? 8% of the GDP, or in 2003, 33% of the GDP. What is GDP? GDP is gross domestic product, right? This means that you're doing something. You're
Production.
you're creating something. What do banks produce? What do banks produce? That
Money, paper,
how can I? That's printing money. What value did they
multiplying,
produce to people, man? Right? The
gambling,
bank,
multiplying the effect of the money.
bro. A bank should not be having. A bank should not be having. Like it should not be anywhere near that much of the GDP, because there is other things like manufacturing that really produce value to society. Okay, you have educational, uh, services, if you will. You have technology. You have, I mean, dude, the list goes on and on. Okay, there is farming, for Christ's sake, man. And that this was what, that much of the freaking GDP, 33% of the GDP is never a good thing. And I think it was in Japan. But I think if you go
Yeah,
back and you look and you see that any economy where the financial sector is a major part of the GDP than
yeah,
than the rest of the economy,
in
it
trouble.
will fail. It will
Yeah.
fail, and that is why this also failed. Okay. Again, I've always said, man, I don't know who taught this guy's economics. Okay, but you don't need to go to school to realize that this thing is a failing situation. Right. Anyway, let's move forward here. What are your thoughts on subprime lending, sir?
Well, I like to keep it simple.
Mm,
I would say that lending
mm,
the debtor is always like I think we all live in we are literally all servants or slaves to the system, really.
yeah.
So when you even not make that even prime, even more subprime, then you have
Right.
some real extreme level slaves, man.
Hey.
I think it's that simple, and it's like, oh, it's a great thing. There's more money in the system. You give 0% interest rate loans to all these big banks, and then they just send it into bigger debts for everybody else, and you
Right.
think that the economy is booming. How's that booming when everything is on debt?
Everything is on that. It's not real. Right. Fake cloud is what it was. Now, check this. What they say in their report here for subprime lending. In the early 1980s, this is as early as 1980, man. People were not even seeing this coming. Subprime lenders, such as Household Finance Corp and thrifts such as Long Beach Savings and Loan, made home equity loans. Right, these were often second mortgages made to borrowers who had yet to establish credit history, and they had all these other yeah, issues, like as we mentioned before, whether it's unemployment,
Yeah,
divorce, medical emergencies, and so on and so forth.
yeah.
Right, these are people that banks may have been unwilling to borrow to when the regulations were in place, but now they were just like, hey, we have an opportunity here to literally just make as much money as we possibly can. Right, so take out the regulations, remove everything. Right, we're going full blown, send it. um but banks may have not been willing to lend to these people in the past. I already said that. But a subprime lender, this is where subprime lender comes in, would, if the borrower paid a higher interest rate. So they hike the interest rate on the borrower and then give them the money to offset the extra risk. No one can debate the need for a legitimate non-prime subprime lending product, claimed Gil Brex at the time, president of the Nevada Fair Housing Center. He
That was the
testified
same
that.
strategy they used with the credit card to introduce credit card into the markets in the 60s, by the way.
Oh, really?
Yeah.
Damn. Okay. Well, interest on subprime mortgages with substantial collateral, the house wasn't as high as those for a car loan, right? And was also much less than for credit cards. This is the
Mm-hmm.
interest rates. The advantages of a mortgage over other forms of debt was solidified in 1986 with the Tax Reform Act, which barred deducting interest payments on consumer loans but kept the deduction for mortgages interest payments. In a few cases, such as City Financial, subprime lending firms were part of a bank holding company, but most, including Household Beneficial Finance, the Money Store, and Champion Mortgage, were independent consumer finance companies, right? So essentially, um, the smaller banks, let's call them the smaller banks, so like the subprime
Mm-hmm.
banks, right?
Mm-hmm.
Um, they used to do these predatory loans and then, sell them to the bigger
Pass them.
banks,
Yep. Yep.
right? But then at some point now, the bigger banks now acquire these smaller companies
To do the. Yep.
to just directly do the same thing,
Yep.
right? Except now that they're just full blown and they can really crank it all the way. Now, in many cases, the finance companies did not keep the mortgages, right? Some sold the loans uh,
The same bank.
to the same banks,
Yep.
extending the warehouse lines. So there's like
Yep.
when they have like the lending overnight exchange rates. Was it called? Is it called? What did they call it? Overnight lending
Yeah.
for
They also
banks,
use it for
something like that.
they also use it for repo as well.
Yeah, exactly. So the banks would securitize and sell the loans to investors or keep them on their balance sheet. In other cases, the finance company itself, right, packaged and sold the loans, often partnering with banks extending these warehouse loans, these warehouse lines. And meanwhile, the SNLs that originated the subprime loans generally financed their own mortgage operations and kept the loans on their balance sheets. It's very interesting how they're able to just move
Is
around this
that
money,
that's the old double money situation as well.
kind of like a double spending
Yeah.
kind of thing. Yeah,
Yep.
because at this point in time, it's like you start seeing that this is already starting to get complicated. Just the part where the person is just there, does not even understand what is happening to this mortgage. And these people are essentially just creating money out of thin air and repackaging and selling this thing and removing all regulations out of their way. Because in many ways, man, there is some elements of money laundering in all the schemes that they're doing.
But they tell you to trust the bank or trust the feds because they know what they're doing. But we're here trying
Yeah.
to tell folks that there is a trustless system that fully automates this whole situation. All this whole situation here could be avoided
Right.
if we
I
just sit
agree.
down and call people out. But nobody's willing to call out the big banks because they're scared of for their career. I don't work in the
Mm,
banking system. Nobody want to call out Congress because Congress has been bought out by lobbyists,
right.
but they keep electing the same people in office who then screw up your money, and you're wondering why your life is not getting any better or you get further getting in debt.
Yeah.
It's crazy.
It is crazy. It is crazy. Now, okay, so we are now at this point where we've seen that these people have essentially removed all the regulations that was there to stop this situation from happening again. And as we roll forward into time, essentially the whole world is now leveraged to the teeth, right? Um, and now we're heading to the boom, right? Before the bust.
Hmm.
And how do these guys go about it? Credit expansion, okay? By the end of 2000, right, the economy had grown 39 straight quarters. The Federal Reserve Chairman Alan Greenspan argued the financial system had achieved unprecedented resilience. Right? Large financial companies were, or at least to many observers at the time, appeared to be profitable, diversified, and executives and regulators agreed protected from catastrophe by sophisticated new techniques of managing risk. Yeah. Okay. As they will find out, though. Anyway, the housing market was also strong between 95 to 2000. Prices rose at an annual rate of 5.2%. Over the next 5 years, the rate will hit 11.5% at some point. Right. Furthermore, the effect of everything that was happening, right? So as home prices rose, homeowners with greater equity felt more financially secure. Partially as a result, they saved less money, which is a problem. Many others went one step further, borrowing against the equity on the house, right? And the effect of this meant that between 2001 and 2007, mortgage debt nationally doubled. Household debt rose from 80% of disposable personal income in 1993 to almost 130% by 2006.
And you thought
More
nothing was
than
gonna happen.
exactly. And that's the part that shocks me when they really thought nothing was going to happen. Oh my goodness. Let's look at a few charts here to see kind of
This is a good
what is
lesson.
happening here. Yeah,
They try to promote that debt is a good thing.
right.
But just there's good debt, there's bad debt. But even good debt is bad debt when you
Right.
have too much of a good debt. How do you have
Mm,
130% of debt and you think that everything is normal? If a
it's not
lot of
normal.
the American household has more debt, that means
And that's it.
that you just
I
go
think
ahead.
I think I was gonna say I think part of this is also the fact that not only are these people attacking or executing their plans on the government side, but I think that they're also executing it on the corporate side. Marketing, right? A lot of times, people are easily influenced. If you see the amount of marketing that has been happening in this country, right, for a long period of
Buy
time
a
now,
car, buy a house.
yeah, when you make people feel like they need to be keeping up with the Joneses, right? Your friend has this car now. You see a commercial, and they're like, "Oh yeah, if you do this, it makes you look good." Dude, you got to think about it, man. There was a time when cigarette commercials was made to seem like if you smoke, you're cool. It was a cool thing, as insane as that sounds. And so these people will market whatever they would I mean, and the general public is does not stand a chance, man, because these people spend millions of dollars just to understand the psychology of consumer so that they can market to you in a certain way. So
So the federal fund rate for these
yeah.
big banks is literally almost zero. But you that are getting in debt, you're over there at 5%. You see that right there?
Yeah. Yeah.
So the bank literally every single day of your life living, you're paying almost a 4%, 5% interest rate debt to the bank.
These people don't have to do anything to make money. They just need to sit around.
Just get the
It's
money
pretty
for
much
free from the
yeah.
government
Yeah.
and recreate money after recreate money, even bet on it and create derivatives. That's why these guys are like
Yeah.
multi-billion, multi-trillion-dollar companies, and then you over here going to go get a mortgage loan for them at five
Yeah.
percent average, right? Whereas they're already making money on it, and they're also betting on your mortgage, making money on it, and you wonder why every single long skyscraper in the big
Yeah.
cities are banks. Of course, they are banks. That's your money.
Yeah.
Go into
Very
any
true.
major big city in the US, you'll see a big bank's name on it. Where you think the money is coming from? The money
Coming
flow
from
is
you.
imbalanced. Yeah, the money flow in this
Absolutely.
country is very imbalanced. Oh, I guess in a lot of
Yeah.
countries, we just get to be able to talk about it here.
Well, I think the imbalance comes from just the fact that there is a group of people that are not putting in work. This is what Bitcoin is all about, right? Proof of work. These guys are not putting in work, right? They print money, give it to them, they take the money and flip it, make everyone put everyone in debt. So everyone is working and paying back this money that they got from where? We don't know. Okay.
The Federal Reserve literally just said, "Oh, folks have too much savings. We need them to spend their money, so we need to increase the interest rates." Oh, there's too many jobs. We need to start getting people to start getting laid off. Oh, we need to kill the like literally. The Federal
They,
Reserve
how
is saying this.
how insane does that sound, man? Why does it have to be? It sounds like your system is broken. Try to change it, but no.
But then,
Yes.
you release money into the system, but the money doesn't go to the people that you destroy in their lives. The money go into the big banks,
It goes into the big banks and they continue to do the same thing we're talking about right now.
and the banks give it to you back in loan, in
Yeah,
debt. They don't give it to you
exactly.
like cash or here goes your money. No, they give it to you
Yeah.
in loan. So they
All
just
right.
get bigger and richer.
There we go. Home prices, as you can see, the home prices was just skyrocketing between 1980 all the way coming up to the crash, essentially in 2008. Um, the areas with the sand states, and I guess that's where you have like premium real estate, where you have the beach and things like that. Those houses were just out of control, just blasting away, right, nonstop. Now, um, Citigroup at some point, at this point, they've gotten so big that they decided they're going to start expanding even more. So,
Can I say
as
something about Citigroup real quick before you jump into
yes,
Citigroup?
go for it, go for it.
See, this is where it's very important that folks understand their history
Right,
and understand where these organizations and these banks have this kind of power in the system today.
right.
Citigroup had so much power back in the day that they were able to influence the US presidents to go to Haiti and take over the entire central bank and take over the entire bank.
Oh yeah,
Take
you
all
were
their
telling me
gold,
about this. You were telling me
right?
about this.
So if Citigroup can influence the US government president to do that back then, are you surprised that Citigroup can now influence the government now to just? That is why they were one of the companies that got saved during the 2008 financial
Mm.
crisis, because they are basically the entire presidential office. They influence the presidential office, and they've been doing this for
Yeah,
decades, maybe even centuries now.
yeah, yeah. How about
So
some
when you see
fairness, eh?
this, don't be
Yeah,
surprised.
absolutely. That's so insane. So insane. All right. Citigroup invites regulatory scrutiny, right? As subprime originators grew, Citigroup decided to expand with troubling consequences. Barely a year after the Graham-Lear Bailey Act validate the Graham-Leach Bailey Act validated its 1998 merger with Travelers. Citigroup made its big move in September 2000. It paid $31 billion for Associates First. This is another firm. Then the second largest subprime lender in the country, which, let me go back. Associates First was the second largest subprime lender in the country at that time, right? Such a merger would usually have required approval from the Federal Reserve and other bank regulators because Associates First owned three small banks in Utah, Delaware, and South Dakota. But these banks were specialized. A provision tucked away in the Graham-Lee Bailey Act kept the Fed out of the mix. How convenient.
I'm telling you, it's similar to what's going on now. All these
Yeah.
buyouts, all these what's it called when those companies have those open checks and they get to invest in any business they want, they can just buy them out.
I
What's it
forgot
called?
what that was called.
I'm running a blank on that right now.
It's not an IPO. Is it a SPAC?
No. Yeah, the SPAC
Is it
deals going
SPACs?
on right now.
Yeah,
The
SPACs.
SPACs.
Yeah, that type
Yeah,
of thing.
this is a similar thing going on, but this right here happened in the banking system. What we have not going on is what's going on in the old technology space as well.
Yeah. Well, the mortgage machine then, it's so insane that it was so convenient how like they just, yeah,
They basically tackled the entire American financial system and broke it down into pieces and took full control of it. Mortgage
exactly.
was a big part of it. But right now, what's going on right now is the old attempt to control the energy space,
Yeah.
control transportation with the old EV and all that stuff. And next
Mm-hmm.
will be also infrastructure. If once they put that plan together, they're doing that, and they're trying to use the old ESG approach as the instrument of attack right now on those spaces as well.
Yeah, ESG, by the way, absolute bullshit, man. I can't even believe that thing. It's so ridiculous. Now, in 2004, commercial banks, thrifts, and investment banks caught up with Fannie Mae. So all of these guys are now catching up to Fannie Mae with mortgage securitization, which they've been doing forever, right?
Hey man, you
But
can't make all the money by yourself, so
hey,
they have to
yeah,
come in there and give them some competition.
exactly. Hit them with some sophistication. Anyway, by 2005, they had taken the lead. Two government-sponsored enterprises maintained their monopoly on securitizing prime mortgages below their loan limits. So again, loan limits, they just move things around to just make it happen, right? But the wave of the home refinancing by prime borrowers spurred by very low, steady interest rates pattered out. What
Yeah.
does that even mean?
Slowly dwindled away, man.
Dwindle away. Okay.
Yeah.
Well, meanwhile, Wall Street was focusing on higher yield loans that GSEs could not purchase and securitize. Loans too large, called jumbo loans, and non-prime loans that didn't meet the GSE standards. Non-prime loans soon became the biggest part of the market. Subprime loans for borrowers with weak credit, Alt A loans. So now they're starting to recategorize loans, like you were mentioning at the beginning, right? Which characteristics were more riskier than the prime loans to borrowers with strong credit. Now, by 2005 and 2006, Wall Street was securitizing 1/3 more loans than Fannie Mae, right? Fannie and Freddie. Did I say Fannie Mae? Is Fannie, was it Fannie? Yeah,
Yeah,
okay.
Fannie Mae and Freddie Mac.
Dude, I don't know why every time I say Fannie Mae, I think of a grandmother.
Well, they are that old, so you good.
I think of a grandmother every time I say
They've been
Fannie
in the
Mae.
system
Man.
for a
Okay.
while.
Right now, in just 2 years now, you have private label mortgage-backed securities, which had grown. Now, private label mortgage-backed securities. So now the private sector has taken over the situation, and they're about to ratchet it all the way up now, right? This private label-backed securities had grown by more than 30%, reaching 1.15 trillion in 2006. 71% of these loans were subprime or alt A.
And guess what? They were selling all that sucker back to Fannie Mae and Freddie Mac. So
Dude,
they were just holding trash.
there was that's a lot of garbage ass loans, man.
It was okay as long as people were making money. So this is where we're trying to say that history might repeat itself, or history might rhyme, and why we need Bitcoin in the space is that each time you've given the banks this opportunity, this is what has happened. So the 2020 COVID situation happened, right?
Yeah.
Again, the government gave the banks this money, but instead of them giving, well, as always, they will give
We'll
you the
get to
money
it.
back. Okay.
Yeah, we'll get to that part. We'll get to that part. Let's not jump ahead of ourselves. We'll get to that part because
it's just
because
it's
this is the same thing that is happening right now. It's just, I mean, yeah,
It's infuriating,
some features might be different, but it is freaking insane. Absolutely.
Yeah,
insane.
it might not be mortgage time around, but it smells like it all over
Yeah,
again.
it's probably because it's like the whole world this time around. It's so
Yeah.
ridiculous. Securitization. So here's a quote from from a city, one of the CEO of Citigroup. Securitization could have been a factory line. Former Citigroup CEO Charles Prince told the FCIC, as more and more of these subprime mortgages were created as raw material for the securitization process. Not surprisingly, in hindsight, more and more of it was of lower and lower quality. No kidding.
How do you say that's a manufacturing line? What are you manufacturing?
Hey, they're
Bad
manufacturing
loans?
debt. They're manufacturing
Paper.
debt. They're manufacturing debt and money. Okay, is what they're doing, and they're
A
saying
bunch
it
of
themselves.
IOUs multiplied by
Yeah.
multiple effects.
Yeah, they're saying it themselves. Now, yeah, that was the good enough, man. Let's talk about the CDO machine. Collateralized debt obligation is what they call it. All right. Let's see here. In the first decade of the 21st century, a previously obscure financial product called a collateralized debt obligation. Why is it previously obscure financial product? They created the freaking product, okay? And they brought it to light. It's what do you mean by it's previously obscure? Like it's like it was something that Jesus put there and you guys just forgot about it. You guys knew about it. You created the thing. It's freaking insane. Right? Anyway, collateralized debt obligation or CDO transformed the mortgage market by creating a new source of demand for the lower rated tranches of mortgage-backed securities, despite their relatively high returns. Tranches rated other than AAA could be hard to sell, obviously, very bad debt. If borrowers were delinquent or defaulted, investors in these tranches were out of luck because they were essentially, based on the structure, they were the last in line to get paid. Right? Go ahead.
It's almost like in the stock market where you say, "Oh, we're gonna grade the stock B or C or whatever," or
Right.
they say, "Oh, because they missed earnings, they're gonna not get this kind of ratings." So,
So this is like stock ratings.
it's very very similar.
Oh,
But
I see.
now you're grading the securities package that you're selling over the oceans.
All right. Well, Wall Street came up with a solution since no one wanted to buy this horrible debt, right? In the words of one banker, they created the investor. Now they're really about to give it to the people.
Hmm.
That is, they build new securities. They build new securities that would buy tranches that had been harder to sell. Bankers would take those low investment grade tranches, largely rated triple B or A, from many mortgage-backed securities and repackage them into new securities, CDOs. Right now, approximately 80% of these CDO tranches would be rated AAA, despite the fact that they were generally compromised of lower rated tranches of mortgage-backed securities.
It's
Isn't
like,
that isn't that straight up lying?
yeah, no, 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 no. It's done
How
every
is that
day.
not
It's
fraud though?
it's done with gold. It's done with oil. So, oh, we don't want Russian oil. But guess
Mhm.
what? If the oil comes through Saudi Arabia, and Saudi Arabia sells the oil to anybody else, oh, it's good oil. Oh, we don't want blood diamonds, or we don't want blood gold. But if the oil goes through, if the gold goes through South Africa, and then it goes to one of the European countries, all of a sudden it's no longer blood diamonds. It's the same thing. They just
Right,
repackage
but
as long
this
as it
is
comes from a
this is
well-branded company.
right. This is what I'm saying. If it is not from the expected source, as long as there is a person that is participating in this market that is not aware of what you guys have done,
You cannot
it
be
is
aware
it
because it's
is
shadow banking.
disingenuous. Right, that's what I'm saying. It is but they cannot be aware. That's why I'm saying that it is fraud, because
That
you're
is why
lying
we
to the
need
people
Bitcoin.
and it's disingenuous, right? So
That's why we
it
need
is.
Bitcoin. It's
Oh,
very
I'm confused then because I
transparent.
said it was fraud, and then you said no, no, no. So I'm like, okay, what? You said I said it was fraud. You said no. That's what I'm saying. I'm saying
Oh
that this is
yeah.
fraud because there are people that were buying these things that do not know what it was. This is
Yes,
fraud.
they cannot
This is
know.
straight
They
up
can never
fraud. Like
know.
there is no two ways about it. This is like straight up fraud. These guys created a massive fraud scheme, and none of them have been penalized for it.
Nobody went
It's
to jail for
absolute
it.
bullshit. Yes, it is straight fraud. That is what this is. Like you can you can use a bunch of fancy words on some shit and make it seem like it's cool, and then expect it. This is fraud, straight up.
Hey, so in that way, Mercedes Benz is fraud because all the parts in the Mercedes Benz is not Mercedes.
Listen, they're probably fraud too, man. Who gives?
Everybody's sharing parts.
Look, look, man. I mean, Mercedes ain't about to wreck the whole world's economy. You know what I
No,
mean?
no, no,
So
no, not
it
at
is
all.
what it is. But as they did in the case of mortgage-backed securities, the rating agencies gave the highest AAA ratings to the securities at the top. So they've taken garbage loans
Yeah,
and they have just changed the rating on it and they're selling it to
yeah,
people. This is why
yeah.
in the stock market, okay, when have you noticed that you no longer we've not actually been getting a lot of these notifications that were saying that like a stock got upgraded or like it got
Mm-hmm,
downgraded by a certain
mm-hmm,
bank.
mm-hmm.
They used to do that back in the day. Okay, and they would do that and drive the price of a stock up or down. Like before, like if they said, "Oh, Tesla got downgraded," maybe it might go
Mm-hmm.
down, or might say, JP Morgan or whatever stock gets upgraded or whatever. That affects the price of the stock.
Yeah,
Until when we got
events.
into this pandemic situation where their ratings were no longer making sense anymore because the markets were just going up and up and up. And even though they were downgrading the ratings on things, it just kept going up and up and up because everything was broken. You know?
Remember at the beginning of the show, you said derivatives and securities are based off of events.
Yeah.
That is one of those events,
Yeah.
and they already know that that event was gonna happen. So they put a bet that okay, I know you're gonna
Yeah.
make that report tomorrow. Let me go ahead and put my bet for a long right now because I know once you release that news, that
Yeah.
event, the price is gonna spike up. And that is how your technical analysis or your investment either get destroyed.
Yeah, this is true. And
Because
that's
they control
remember
the whole thing. They,
they
they
control the
control the
whole
entire
thing.
cycle.
They control the whole thing. Because remember, we're doing the technical analysis and everything. And that's also the one thing because like sometimes you see people online who say something like
BS. Yes.
what did they call it? Yeah, they call it say it's astrology for men.
Yeah. Yeah.
Let me explain something, okay? If someone knew technical analysis, if people who knew technical analysis, or anyone who has a decent sense of technical analysis on their head, okay, they would have known that they should not be taking collateralized loan on Bitcoin at
Mm-hmm.
69K.
Mm-hmm.
True or false? Because the double
True.
top was there, it was
Yep.
clear, and
Yep.
you could not see that double top anywhere else but on a chart,
Mm.
which you could not see if you did not know how to do technical analysis.
Exactly.
A lot of people on the internet are stupid, bro, but they do not realize it. I digress. Collateralized loan obligations. Okay. So you can see that what happened was one, okay, the CDO manager and security firms would select and purchase assets such as the lower rated tranches of mortgage backed securities. So they've taken garbage loans, loans that would have not been approved, something that should not be in this situation, right?
Mm-hmm.
And then they've taken it and they have combined it with other
Some
securities too,
A's and
right?
yeah, yeah.
Exactly. So CDO manager and securities firm pool various assets in an attempt to get diversification benefits. What? You guys is like there was no diversification in this situation. And mind you, they're doing this with people's 401ks and pension and all that
Pension
stuff, right?
plans, yeah. To the
Insanity.
point that a lot of European banks were buying it. That's how Europe got
Wait until
screwed up.
AIG steps into the picture. Shoo! Insanity. CDO tranches similar to mortgage-backed securities. The CDOs issues securities in tranches that vary based on their place in the cash flow waterfall. So essentially, they just combine a bunch of things and just slap them around and
It's called packaging.
packaging and repackaging and
Yeah.
yeah. Now, starting in 1998, AIG. Okay,
Gang,
I gotta listen. Double O standby. I cannot go without dropping them with this one. Okay, AIG came in. There we go.
Scary. Yeah. By the way, I lost a lot of money in AIG because I actually had AIG stocks when all of this went down.
Oh damn!
I
Really?
got destroyed. I
Jeez,
got
man.
destroyed.
Are you still hodling or you sold?
I sold AIG at the loss. I'm still hodling my Fannie Mae and Freddie Mac.
Oh, okay. Well, listen, man.
Man,
Hang on to it.
$64,000, man. Destroyed to like I don't even know what it's what now, 16,000 or whatever.
Do you think it's ever gonna come back?
If the government releases it back to the private, you know how the private goes crazy. They start creating all sorts of crazy instruments. It will come back. But right now it's
Yeah.
with the government.
Yeah.
So government is terrible with money anyway.
True
So
that. True that. Yeah. All
right
right.
now
Well,
I'm still
here we go then. Starting in 1998, AIG Financial Products, all right, a Connecticut-based unit with major operations in London, figured out a new way to make money from those ratings. I like how these guys are always figuring out a way to make money from
but
nothing.
then but
Okay.
then when you and I try to come up with a way, it's not legal. It's not right.
Hey, listen, man.
But
I
they
can
can make
come
up
up with some
anything they want.
ways. I can come up with some ways right now and securitize that thing.
You
But
don't have the
who would I even
license.
who do I even talk to? I don't have the license.
You gotta get approved by one of these banks.
Yeah, they put the license in place so that nobody can cross the line and get to them, man. Oh,
Uh,
man, listen,
Sit
man.
down there, you peasants.
I'll give them this, man. These guys have been winning at life, man. They jumped into earth and they were like, let's just do this thing and not let this, let them make them think that we were here first.
We own this space.
Listen,
You just shut up and watch us play.
Bitcoin is on your necks now. Okay, Bitcoin is on your neck now. We got you now. So here we go. So they figure out to make money from these ratings, right? Relying on the guarantee of its parent AIG. AIG Financial Products became a major over-the-counter derivative seller, eventually having a portfolio of 2.7 trillion in notional amount. Now, here's the thing: they say notional amount. What is notional amount?
I said I have 2.7. I have 2.7.
Okay, there we go, man. Listen, ladies and gentlemen, I'd like to let all of you know right now that I am worth about $37 billion notionally.
Amen to that.
There we go. Thank you. Now, speak it into existence, sir. All right, here we go. Among other derivatives, among other derivative activities, right? The unit issued credit default swaps, guaranteeing debt obligations held by financial institutions and other. Hold up. Let me go back. These people issued credit default swaps, guaranteeing debt obligations held by financial institutions and other investors. So they were giving a guarantee on debt that other people had, even though they don't have control over those people's actions.
That's why, at the JOB, you can transfer a risk. So you
True.
transfer risk and then you put a blind sight at the risk, like, oh, shit, does it really
True.
exist? You can't do that at the job,
Yeah.
though. You
Yeah.
lose your job.
Yeah. You can transferring risk, and that's something. Well then, in exchange, right, for a stream of premium like payments, AIG financial products agreed to reimburse the investors in such a debt obligation in the event of a default. So they say if the debt goes into default, okay, we are guaranteeing you that we will reimburse you for this situation.